All right, guys, well, welcome back. Let's have a look at SPX. So I want to quickly update today on Wednesday. So today market was down 1.3%. SPX. That's where we closed 40.90. And during the day, it was doing just fine after pretty much trying to fill yesterday's gap because market gap down pretty big in the morning, and it did try to recover. And last like 30 minutes or 1 hour of the market, it did sell off and went basically all the way back to where it opened in the morning. So what's going on and what I'm looking for from here? So just like we said, this week you can see pretty much Monday through Tuesday. So look where we opened on Monday and look where we are today. So, and we have one more day, and next Monday is pretty much President's Day. It's off. So look, basically flat OPEX tomorrow. It's not really big OPEX, but it's a monthly OPEX, option expiration day. So and maximum pain, that's what I was paying attention to. I'm gonna just take a look at the SPY. So SPY maximum pain 405, and SPY at the moment is trading at around 408. So if tomorrow we close right around last week's Friday lows, I won't be surprised, because after market close you can see SPY is at 407. So, and what I'm watching is a support and resistance for SPX. So let's switch back to SPX and switch to daily charts. You can see here again this 40-50 next level of support for me, and all the way to 50-day moving average, this yellow line on my chart, which is almost 39.72. So give or take near this 4,000 level. That would be the support, and that would be the pullback area I'm watching for possible bounce. But I'm not looking for too big of a bounce if market starts, if you follow this Fed Watch tool. So pretty much next Fed rate decision is in 33 days. And today, if you just take a look at the probability of 50 basis point rate hike increased, because yesterday it was 12% probability of that happening. Today, after that, a lot of I think couple Fed members spoke, and it went up 19%. So if this number goes higher and this probability of 0.25 basis point goes down, well, watch out for market basically in Q1 to be all the way down there, or maybe even break below this down uptrend, because technically speaking we are still in an uptrend for the past 4 or 5 months or so. So we're still in that uptrend, but ultra short term right here, right now, market is pretty much flat to neutral. Maybe you could say that market is taking a break, but a couple days ago I showed you the SPX put to call ratio, where a lot of people were betting to the downside just by tracking put to call ratio for SPX. And you can see anytime this is the chart of the SPX, you can go backtrack and say look up the SPX chart, and when put to call ratio was this high, what happened to Sp500 and other indices. So it's high, a lot of people were buying puts, and now we're getting it's 1.3% down move. I mean, it's not significant, but it could be just the beginning of a pullback. And what else I wanted to show you? Heat map today, pretty much there wasn't a place to hide. Everything came down, and the biggest drag was these tech names. Anytime you see these tech names sell off like this or pull back, it's not a significant sell off, because you can see the biggest loser today was Tesla with 5.7%. But considering how far it has come, it's not too big of a pullback. So what else I wanted to show you guys here? The percent of stocks above their 5-day moving average and 20-day moving average in S&P 500 are still low if you are someone who trades momentum, and if you are intraday trader or very ultra short-term day trader, you want to pay attention to that because well, not many stocks are participating in that rally. Well, that's, I mean, you can just take a look at the chart and maybe even pull up just the 5-day moving average and just pay attention to what 5-day moving average doing, and based on that you can make a decision whether market is moving sideways, or if it's in an uptrend, or if it's in a downtrend. So on my chart, this blue line right here that I'm drawing it with purple, this is 5-day moving average, and just pay attention to like this section of 5-day moving average. I mean, it's doing pretty much, it was going sideways, which meant that you are not bearish, you are not bullish. So anytime it starts uptrending, yes, you can buy the dip and you can pretty much look at that level as a support level. But anytime it's downtrending, if we just zoom out a little bit, just like this, where it's clearly showing you that it's in a downtrend, you can use it as a resistance level and maybe be a little bit more confident betting to the downside. So right here, right now, momentum sideways, and I'm more bearish than I'm bullish right here, right now, because market has to take a break. It doesn't have to come crashing down, but it needs to pull back to attract more bulls, or it needs to just chill and basically get more data, get more earnings reports, updates, even though most of the earnings are out, to basically catch on something positive and just pretty much run with it to the upside. But so far right here, right now, considering all those things that came out, there's not much to catch on and pretty much run with it. So that's the basically simple basic update for today. Weekend we'll dive a little bit in depth, but that's what I'm watching, and thanks for watching. See you in the next update.